Shout out to one of the new sponsors of the stream. Woo it's a newer exchange, but it has the, as you can see, best liquidity, lowest fees. They're an exchange built for traders essentially. So what you'll see is on the right-hand side of the screen, I have one portion of the desktop, the website, but you could have multiple DOMs running across this thing. For the sake of the stream, I have the ETH and the BTC DOM, but this is everything that I've always wanted from an exchange UI with the DOM right on it. So what do I mean by the DOM right on it? I mean, if we want to just click on this thing and buy BTC and place orders in the bid and the ask very quickly, right? So almost exactly what I'm using when I'm trading the ES or the NQ. Not exactly, but for the sake of execution and speed, it's right there. What I do want to say is that anyone who trades on a different exchange right now, Woo is going to match your fees, or beat them rather. So everyone knows how, from a spot standpoint, they're the most superior exchange for fees. If you look at their liquidity, their dashboard, you could see for 99% of traders, they would really benefit on trading, trading on Woo than any of the other competitors. If you do opt to switch over to Woo, they, like I said, will beat your fees. If anything, one of the better things about it is they're just really upfront. So your balance sheet, the reserves, all that stuff is up to date, is published right front and center, which I think is something that's really important right now. So shout out to them. The link is below. I don't want to go into it much longer because you guys know I don't really like to shill anything, but I do like to put my word behind what I think is a good platform. And yeah, they're only available to people that are outside the United States. Obviously, I could talk about platforms that are not in the United States. You could pull them up, but can't actually go ahead and trade on them. Okay, anyhow, so let's get into it. So yeah, actually, I lost money today. So I ended up basically flat. Not flat, I mean, after fees, after being offside slightly, and then a big XRP win, I was basically, I had a losing day, which kind of fucking sucked because my XRP win was pretty significant. Calling it a win, I don't know why I'm calling it a win. First things first, we'll take a quick look at XRP. There was a fake ETF filing, and this was posted on Twitter. And this is basically the price action right after that. So you're looking at 15-second candles. So, 15-second candles, not for nothing. You're looking at 1, 2, 3, 4, that's 60 seconds right there. So that's a minute past. Even if you got to this thing late, you were able to tag on a decent position and ride the lightning. And that's exactly what I did. Okay, so first and foremost, trading on its own is very difficult, right? it goes without saying. It sounds kind of ridiculous. You guys know that. Trading is very difficult. In normal circumstances, so just me personally, let's say normal circumstances, I might be monitoring 3, 4 max assets at once. I don't like to have too many line items. By too many line items, I mean exactly as that sounds, multiple positions open, which is something that's really easy to do during a time like this, when there's really nothing special that anyone's doing when they're sharing their TA or sharing their ideas on Twitter. So I posted that the other day. Even myself, sharing setups. It's the market right now. Everything is catching a breeze, everything is catching a pump, and it's been, for the most part, somewhat sustained. Before this, like I said, trading on its own is difficult when you're only trying to, like I said, it's 3, 4 for me. I'll trade BTC, ETH, and then what is basically the, maybe the flavor of the month, where most of the attention is at any given time. And that might be 1 or 2 pairs, and you might rotate that over time. But again, it's never going to really expand much beyond that. Even if you're just trading one asset, that requires your full attention, right? If you're an intraday trader, even if you're a swing trader and further up, trading is something that requires your full attention, not only just the attention of paying attention and observing, but you have to be really sharp. So on its own, it's very, very difficult. Now imagine what it's like for 99% of people right now when everything is moving. You would think it'd be really easy because all you have to do is kind of throw a dart. But for people that are late, this is where it gets really difficult. A lot of people don't buy the bottom. A lot of people don't get in position earlier or do what I talk about frequently, which is just place an anchor position on, right? Tag something on so that you pay attention. Right? This is something that I commonly do. It's something that I frequently reference. Putting on a small position is something I'm interested in. It might not be the best technical setup for this, is more for a swing, a longer term position, but at least it forces me to pay attention and have a little bit more feel for that, how that asset's trading. So if you don't have any positions established and you see that the market is, in many cases, if we just look at, let's say over the last month, for example. So over the last month, go to percent, and we'll just run through these. Algo, 46%. 33%. And this is the last month. So 30-day period from whatever today is, right? So today's the 13th. So this isn't including all of October. But you just go down the line, right? And we had a big pullback today, but even still, AVAX up 79%, put in a really big move the last 2 days. Bonk, right? 1,000% basically, CFX. You get the idea. All of these pairs are up tremendously. So a lot of people missed out on these moves, right? Or they arrived to them whenever they're already up 30, 40%. And considering the conditions that we're coming from, right? So we're in a bear market. Market was choppy and sideways and very uncertain for a long time. It's pretty normal to look at a 30% move or a 20% move as possibly being something that's going to mean revert or something that you should fade, because that's been the case for the last few months. So when the market continues up instead, it puts a lot of people on their heels. And like I said, the trouble is in trading, it's difficult already, even if you have it just isolated down to one asset. If you were just to say, hey, I'm just going to trade Bitcoin, or I'm going to just trade Solana, you still you have a really tall task ahead of you to be a successful trader, right? So now you have this crazy frenzy, and it's sort of like, you ever see those game shows where they send people in the store with a, list of items. They could get all these things for free, or they have to go through the grocery store. I forgot, it used to be on TV years ago. And it's really difficult for people, even if they know that everything is free, right? And it's a game, to get what they want, right? Because suddenly they are just inundated with possibility and choices, and overwhelmed rather. And instead what happens is they freeze and they're unable to execute. So if you look back at previous bull markets and really strong trends, what you'll notice is it's actually really difficult to, from a textbook standpoint. So if we just look at BTC right now, yeah, in a textbook, you would want to see a support and resistance retest. But if you look at this on the daily, it's just been kind of sweeping prior daily closes, daily opens, and resuming up. This entire trend right here, you didn't get a pullback to the most important contextual level. Instead, we just nuked right through it. By the time you do have a pullback on higher time frame structure, it's going to be really ugly. And a lot of times people are not going to want to buy it at all. But, there's got to be other things and qualifiers that you have at this point, because a really strong trend is not going to give you the cleanest entry. So one thing that I'm doing right now, and when I say clean, I just mean from a market structure standpoint. If I look at this chart, honestly, in BTC right now, the area that I think maximum fear would occur and where I think maximum opportunity would be down here around this gap, right? So we're all familiar with how I trade, and gaps and vacuums left and single prints. And, these are a lot of the times the oh fuck area where it's actually really good to get involved. If you see a liquidation cascade through here, a lot of people are going to be panicking. Oftentimes that's the thing that's going to rip back up with just as much ferocity as it did on the way down. But, we might not even get that. We might get just a very shallow pullback right now. In alts, it's the same thing. It's like alts have a 10% pullback. Is that the cleansing? Do we need a 30% pullback? In prior bull markets, they've had 25, 30% pullbacks intraday before ripping back upward. If we look at, and I know this is kind of a holistic view, we'll look at BTC in a second. Things to be mindful of. So the pinch, I've talked about the pinch before. It's when dominance by open interest between alts and BTC begins to converge. So we're at highs for the last couple of years. So for alt open interest, BTC dominance was up until I think the 27th, and then has dropped down since then. Alt caught an awesome gust of wind, but alt dominance by volume and open interest up, BTC dropping. A lot of times this has been in bear market conditions. What this was is money's coming out of BTC, it's going into alts. And then instead of going back into BTC, this is where it mattered. It actually, everything came out, right? So it was just positions were sold off, positions were liquidated. So this pinch was a sign that the top was near. So when they're converging, it's always been a sign that at that point, maybe they was exhausted and we're looking for some kind of cleansing. The flywheel of a bull market is where this happens, right? Then the open interest and all the money that's taken out of alts successfully goes back into BTC, goes back into majors. And then we have this rising effect over time. And instead of this just maintaining the same range over time, open interest for alts, so it's not going to be by percent because those can stay the same. Open interest as a whole for alts goes up. Open interest as a whole for BTC goes up. So you want to pay attention to just absolute values and open interest as well. For short-term trades, relative values are more important, but for a bull market, you should see open interest continue to go up over time, right? Especially after we're out of the lows, you want to see people actually interested in the trend. So BTC had an inside day. So you had this day right here engulfed in that day. You had an inside day break. So a lot of times when you get that commitment outside, so here is the inside day setup. the 12th, inside of the 11th. And what you're looking at is acceptance outside of, right? Outside of the 12th low, playing to the extreme of the day prior. In this case, we actually closed out, right? So you'll look for fake outs through this level, right? So you'll look through a fake out. Here is the 11th. You have the 12th fully engulfed. So you have that inside day that closed out. Best case scenario for us would have been us to get back within that range. Instead, obviously, we have broken outside of it. And we have our first close breaking down outside of the last 3-day range. So I think obviously bulls want to get back inside of that composite. So you have a nice clean area of value in the last 4 days, right between 36.8 and 37.4. We're trading at weekly VWAP right now. Would it be weird to see us retest that after being extended 1 standard, 2 standard deviations above for a while and a really strong trend? No, absolutely not, right? So I still, for short-term trades, I would want to see that we're at least back above today's open. So daily open right now, I think it's just kind of one-sided, right? We don't really have a wick at all for today's daily open. So that's the first area that I would look to see how we get a response. We should revisit that, to be fair, right? So if we revisit the daily open, right, and we move up and we cannot get back inside yesterday's value. So yesterday's value is, like I said, 36.8 for that entire composite. But the lows of this range for, what just closed out, 36.7. If we can't get back inside of there, if we get back inside of there, I would say that you just target the midpoint of that structure. You target yesterday's value area high, 37.1, intraday trade. But otherwise, if this could possibly be the dip, right? The dip before we reattack what is currently the highs. But if we don't, right, if we end up breaking above the daily open, retesting that 36.5 level, 36.7 level, and you see absorption at that level, and a spot just continues to hammer it again, that could be today's wick. And again, maybe we're getting sort of a short-term cooling of this trend because we haven't really had much. One thing I'll point out is if we look at BTC now, a lot of times I see a structure like this. I think this. You either end with something like this. From where we are now, we do that, or we take this high and then we end up doing that. We've had a really strong move. Right? You have the ETF announcement that took us here, the fake one, the real one, the strengthening of that. Obviously, it's going to happen. ETH ETF, XRP bullshit one today. Thank God it was bullshit. I think that would have been terrible for the market. Would have made it all a real big joke. But still, I don't think there's much upside before we get a deeper pullback. I think you get an ETF announcement, you tag 40 again maybe, but then we have, this is already kind of saturated. Then maybe we get our deeper pullback to right around, again, let's say ETF announcement came out in the near future, tag up to 40, and then we get some kind of pullback back to this gap. Something that I was pointing out earlier on ETH. Now, this very well could be the funding rate ARB. So if you look at ETH funding rates annualized, I think it was like 25%. The quarterlies were at like 10%. If you looked at Binance perps, they were like $3 above at one point. So, let's say ETH was trading at 2060. It's like 2063 on Binance perps and 2060 on the spot market. So it's, it's widening. Funding rates obviously elevated. You could look at those right away and see that. So I was looking at this, price moving sideways. If you look at the coin margin in red, this USDT margins down only, prices staying flat though. During that down only period, price stayed flat, spot CVD moving up, open interest going up. So this is open interest right here. But that big spill ended up cleansing most of this open interest. So it's not like that big increase actually in open interest actually happened on that spike up. So when USDT margin was also buying. So this could very well be funding rate ARB. So what that means is, that's where this is diverging. You're getting people buying spot and then selling futures right against that spot and getting paid that funding rate, right? So you're getting paid. If you have a big enough position, you can see how much that adds up. So that's a relatively risk-free trade. So that's possible. But I think more importantly for ETH, I think ETH is just earlier on the cusp of a very big breakout. It's lagging behind BTC. Right, it's been weaker than BTC this year, which makes it a little bit iffy because BTC had a bigger pullback now. Would ETH maintain strength? Well, when BTC was pulling back, we saw that ETH was able to hold up and hold its strength against BTC. So you had a big move on the 9th, we had a decent move today. I think a lot of the market is starting to rotate to ETH, and I think kind of rightfully so. I think that the best time to rotate to ETH would have been the ETF announcement, honestly, but I think you're getting some front running of that now from a market structure standpoint. I don't really like to go by this alone, but we did hit this. We hit those June 2022 lows. I think everything might take a breather, but I don't think it changes anything for the higher time frame trend. So optimal trade setup during the stream would have been if we're able to trade back inside yesterday's range, but instead it's just been a good stream to hash it out and talk things over. I think the next area I would want to see act as support is honestly kind of right where we are. So just remembering this resistance level right here, that's right around 36. You know, again, really strong trend. Should you get a really big flush out, you know, some kind of second dip into that level. Otherwise, I mean, if the point is, if that doesn't, you know, what do you have? Diagonal, probably not as strong, more like your range. You know, if we don't hold that 36 level, you're probably coming down to test in the 33s, 34.2 level. The point is, that's not a whole lot. This kind of structure is not that, it's not substantial. It's a grind up. It's not something that's been established for a long period of time. I'm going to wrap it up though, guys. My voice is starting to really kill me. But I appreciate you guys tuning in. Hit the like button, hit the subscribe button, and I'll post when I go live again next. Not really sure when. I have to get teeth pulled this week. Sucks. So I'll let you guys know. And yeah, until next time, have a fantastic evening. I'll talk to you soon.